I got my life insurance through work. I'm good. I got enough.
Alright, stop, collaborate and listen.
It's not enough. Hi, I'm Antonio Cibella with Vision Wealth Management. Welcome to our next episode in Planning in Your 30s. How much life insurance do you need? Spoiler alert, it's a lot more than you think you actually need. I can't tell you how many times I've talked to folks who say, I've got insurance through work, I'm covered, when I ask them about life insurance. Now, the basis for any financial plan is protecting against the what ifs. What if I pass away too soon? What if I live too long? What if I lose my ability to earn income if I'm hurt and I'm not able to work? You need protection for those things as step number one in a plan, and a big one is life insurance. So how much insurance do you actually need? Today we're going to talk about it and we're going to figure it all out. So we'll start with the story. Let's say I'm talking to Jim and Pam. They're a young couple. They're in their mid-30s. Normal, run-of-the-mill young couple. They're both at work. They earn $75,000 a year each. They have a $250,000 mortgage. They've got two young children at home. And I'm on the phone with Jim. And I say, Jim, how you doing on life insurance? And he says, oh, I'm good. I've got my insurance through work. I've heard that before. It's not enough. So I've got my life insurance through work. I'm covered. They give me 3 times my salary. I make $75,000 a year. I've got $225,000 of life insurance. I don't need to worry about that. And I say to him, Jim, not enough. We got to fix that. And I start talking through it with him, and he says, yeah, I know. But I got to get my son to soccer. Let's talk about that. Let's figure it out. We'll talk about it soon. And the next day, Jim gets run over by a bus. I know, we got a really sad video today, but this is an actual thing, so let's talk about this. Jim gets run over by a bus. Pam gets a check for $225,000, and she calls me up and says, hey, Antonio, you know that Jim passed away? We got the life insurance money. We need to sit down. Got a lot going on. Let's figure this thing out. How are we going to fix it? The short version is we're not going to fix it with $225,000. See, if Jim was 36 years old, he was making $75,000 a year in a 2-income household. Between the day that Jim passed and retirement, he was expecting that he would earn another $2.25 million. That's not allotting for any raises. That's just $75,000 a year for 30 years. And we're now trying to fix the problem of all of that money that was going to flow into the household to pay down the mortgage, to save for retirement, to put money away for the kids' college fund. All of those things that they were doing, now they don't have the ability to do, and there's not enough capital there. There's not enough money coming in to fix it. So how do you fix it? Well, to start with, get more insurance. At least 10 times your annual salary is a good rule of thumb. Plus enough money to pay off any bills that you'd be leaving behind if something happened and you were to pass away. So 10 times your salary, pay off the bills. If Jim had a $250,000 mortgage, he made $75,000 a year, $1 million term policy, absolutely not out of line. Also not particularly expensive because it's highly unlikely that Jim would pass away, but if he did, that $1 million death benefit that would pass into the household that would go to Pam will make all the difference in the world. You see, if in scenario number 1 where Jim passes away and there's $225,000, my conversation with Pam is about, you going to sell the house? Because you probably can't afford it anymore. And let's look at the budget. Where can you cut? Because you're going to need to cut back. And saving for the kids' college, certainly not going to be something that you're able to do right now because the income just got cut in half. And so unless they were living way below their means, and most people are not, they're living appropriately for 2 incomes. If you lose one of those incomes, you got a whole heap of problems. Conversation number 2, if Jim had gone out and gotten the term policy, is very different. We say, okay, Pam, here's what we can do. First, we're going to pay off the mortgage. Now the house is safe. The home is protected. You're good there. Now we need to look at the budget and see what you need to supplement to be able to make the bills and what we can put away for the future so that it can continue to grow and come back into the plan to pay for the things like college or help with college that you and Jim were planning to do in the first place. Insurance is cheap when you're talking about term insurance. Get more than what you think you'll need because God forbid your family needs it. You're going to be far better off with the larger benefit. I've never heard of someone saying, this check is just too much. Send some of it back to the insurance company. You can fix this problem for $20,000, $30, $40, $50 a month, depending upon exactly how much insurance you need for how long and what your health is like. It's an easy fix. Make sure you're not underinsured. Take a look at your policies. Don't just sit with the work policy. You can do better than that. I hope you learned something. Thanks for sticking around today. Hope you enjoyed the video, and I'll see you soon.